Hi everybody, back again with another informative, hopefully, video. So, I tried this earlier today and I did like probably 30 minutes of it and terminated the recording and I did not have my mic on. So there was 30 minutes of really cool charts and no narration on what the heck was going on. So, I'm going to try it again. Alright, here we have crude oil, a 5-minute chart, with a couple of, we have a couple of things that help me. I tried to minimize my charts as much as possible because I junk them up and then I clean them off, and then I junk them up and then I clean them off, and I junk them up and I clean them off. And, you know, probably everybody does that because they find just one more indicator that, you know, can help them. Next thing you know, they have 30 indicators on their charts and they get confused and wrapped around the wheel because they get conflicting signals from everybody. So, anyway, I just try to pick the ones that are going to help me the most. So this is a 5-minute chart, crude oil, from Monday night. There's close. It's about what's it, 1805, 18. Yeah, there is 1800. Globex, from Globex all the way into today's session, all the way to the end. Okay, so what did we do? We had Ed's proprietary indicator right there, saying 10 minutes after Globex open, it said sell it. So you had a sell signal here. Oh, I put an Ichimoku cloud on it because a lot of people trade Ichimoku, but I have found by experience that most of the people that trade it or try to trade it, and most of the people, especially most of the people that teach it, they have no idea what they're not a clue what they're doing. A lot of people, this is what they'll teach. They'll teach, well, you know, when price action comes into the cloud, it's going to chop, so you don't take any trades in the cloud. You take it as it exits the bottom of the cloud for a short, and when it comes up to the top of the cloud, you take it for a long, right? Well, sometimes it works, sometimes it doesn't. In this particular case, it got you in way late. I had a sell signal here, I had a cross here, I had a cross of this line right here. You had a cross right there going down, and that got you in fully 30 ticks before, 30 or 40 ticks before that guy. That was basically 82.20. The cross was at, let's see, that was 82.47. Another cross at 82.43. So, you know, you're looking at almost 30, like 25 ticks that you'd have lost. $250 per contract you'd have lost by waiting to break through the bottom of the cloud. That's why I don't like cloud trading. That's why I think that breakout traders are cheating themselves out of a lot more profit. So what happened? This is just a standard Ichimoku cloud on a 5-minute chart. Comes back up. Ichimoku says, you know, you can take the pullback, take the pullback into the cloud. When it exits the cloud, you're in. Okay, well, that's cool. That's fine, except you're getting an 82.06. You're getting an even lower price than you would be here, right? You had an arrow there, which would have gotten you in at about the same price, 82.08. And another pullback to this, about this area here, which you got you in at 82.02, right? So 82.02, the difference from 82.02 to 82.49 is almost $500 per contract, right? You want to get in as early as you possibly can, right? Especially on a move that may trend. And crude oil is kind of nice because it has usually has these big wide swings. Not always, but usually. So you can tell, here's my Globex open block. What happens? The Asian market opened lower than Globex, and then London opened lower. Then the 4 a.m. bond auction came in and forced it even lower. So you got, this is lower than that, this is lower than that, this is lower than that. So you're basically selling off. So all you're doing is looking at an entry point at this particular point. Just looking for an entry point to go short. Now what happens? You have the 8 a.m. bond auction, which turned things around. Okay, and then it went back up. So what you're doing is you're leaving. You're getting in, say here, you already left $500 on the table. You come down, right? And then you get out when you penetrate through the Ichimoku cloud, which is right there, 80.76. So you're getting in at what? The first opportunity at 82.18, 82.20, 82.19, right up in here, okay? So you're getting in, you're getting short, and then you're going back, flipping back to the long at 80.76, right? Well, you left all this on the table, right? You left, that's a $1,500 move, which was like almost $2,000 down. You left all this from here, down in this area, up to here. You left all that stuff on the table, right? So if you couldn't have gotten it down here, okay, and I'll show you how to have gotten down in right there. You could have gotten in right there at 80.34, flip to the long, or there at 80.41, 80.42 area. Okay, so there's your flip point right there and right there. Pull back, flip, pull back, and from here you see nothing. You had basically nothing. Okay, boom. There was, this is more of a holy grail entry than anything else. There's your holy grail trade right there. You could have had one right there, right there, right there, any of these pullbacks, right? And then just shot straight up. Now, the cloud got you in late, got you out late, right? You say, well, yeah, I got the meat of the move, but how much of that move did you get? You could have gotten more, and you might have got a better entry down here. Now, let me show you a better way to do this, okay? And I don't use the Ichimoku cloud. I use my own, but I'm minimizing a lot of stuff. Minimizing a lot of stuff down here. So, what I am doing is this. What I did was turn off the cloud, okay? Because the cloud gets you in late, blah blah blah. Okay, the 50 SSMA. Yeah, that could get you in, but when it's just another confirmation. Do you really need it? Okay, so I'm going to turn the 50 SSMA off in a second here. The only things I've got are on this chart. I have the Tinkinson line and the Kijinson line right there, the KS and the TS line. Okay, the KS line you can use as a trigger trailing as a trailing stop. Okay, so when it goes above that, your short trade, you would get out of your short trade there, and you could get back in on the downside. Okay, the Tinkinson line is nice for getting in. You can make a little cloud between the Tinkinson and the Kijinson line. Okay, if it goes above that, then you're out, right, and you're on the downside. Well, you can see this thing just sloping down, sloping down, sloping down, sloping down. Now, here's the really cool part about this, and I'll show you how to even make it even better in a minute. See the Globex open block up here. You've got the Kijinson, the Tinkinson line there, and the Kijinson line there. The Kijinson lines pull back, pull down, penetrate. There's the cross, penetrated the Tinkinson line, and then went down. Okay, so there it goes, and you can see the Kijinson line is basically following price action down, right? Until you could use it as an entry or an exit, both right there. There's an entry and an exit both there. My favorite strategy is when the Kijinson line, see a Kijinson line flatten out, KS line, see it flatten out, and you have it cross to the downside and it flattens out. I love to take pullbacks to this Kijinson line right there. I'll use that as an entry, right? Now, we had one right there, right before that drop, right before that big drop, we had a pullback to the Kijinson line, which lets you get into that short trade if you weren't in here, if you weren't in back here at this guy, you weren't in back here at the cross, you could basically take it as it flattened out, flattened out. If it pulls back, grab it. If not, then take it to the next one. There's the next pullback right there, and you can take that. And it just took off to the downside, right? Pull back to the 50 SSMA, and then took off to the downside. And here you go. You just put it on your charts, and you can play with it. Now, what's really cool about this, let me take the Tinkinson line off for a second. Okay, now all we have is the Tinkinson line, and you have that. It's a special version of a 50 moving average. You can use that also for pullbacks. I like this to help me figure out which side of the trade I'm on. The alternations right here basically say that I am in chop. Now we head down here. What's interesting is the turnaround, okay? You've got a very wide turnaround point right here between the 8 a.m. bond auction, right? And back down up in here into that area. Huge. Well, what are you gonna do? What's the best place to get in? You could pull back to the 50, you could pull back to this is the Keynesian line here. You could wait until when it crossed up right here, you get out of your long. You can flip to the short here. Sorry, get out of your short, flip to the long. Sorry, it's been a long day, and I've been sick today. So, pulls down, here's your 8 a.m. bond auction, which usually provokes a move in the market, one way or the other, which this provoked a reversal, complete reversal of the overnight trend. Came down, came up, pull back. That was your entry or your exit from the short trade. And you could enter, you could flip there, or you could exit, wait till it comes back down and retest that Keynesian line, and taking the long right there. Pullbacks. Just take that pullback right there. Either way. If you'll notice, it came up to the 50 SSMA, smooth moving average, simple moving average. And then there it goes. Just went to the upside. There's your arrow also if you wanted to take it there. Now, it came all the way up to basically right in here where the market closed. Well, it came down as it was following this 50 line here, and then it separated and came down. Now, as it separated and came down, you could have used, you could have used a Keynesian line, but it would have gotten you out, down here, okay? There was you see where that sale close block is? That's where you start thinking about getting out. And that's starting at about 14:45. So you're getting out of your trade, right? You get out anywhere in here. I mean, it's, to look at the time of day. There's your close block, time of day. Pop back up. As it came back down, get out. You could have flipped short if you wanted to. If you're going to hold overnight, you could have flipped short at 88.06, something like that. Yeah, so you're looking at 88.06 going short. And pull back a little bit, 82.71, and we're just having some consolidation right here. And the market's going to decide, okay, are we gonna push it higher, or are we gonna sell off? And the Asian session, usually between Globex and Asian, will tell you here's your close block here, here's your Globex open block, which is down between Globex and between the close block here and Globex open block here. It's selling, they've been selling it off. So it's the balance of probability. This is never a certainty. It's never a certainty of trading in anything, I don't guess. But as it comes back through here, take your short, right? Or you keep your stop back, or right around this area. You're looking at anything above 82.97 for a stop, and your entry would have been either you're looking at 82.82, or I think I got it on this pullback right here, which was at 82.87. So, 82.87, pull back there, and then take it short. Do not move your stop loss break even. Please don't move your stop loss break even. The reason is why? Because right there, if you took the short there, they came back and just took your stop loss out. That's what the market makers like to do. Anyway, let me make it even more clear. I'll turn off that 50, and you can see how the Keynesian line would have kept you in trend all day long. Okay, now you can see that. See where the Keynesian line that red line right there would have kept you in trend all morning long, and then got you in and let you flip right after the bond auction, after the 8 a.m. bond auction, let you flip to the long right there. Kept your stop loss back down here maybe, and let it go to the upside. Perfect. Anyway, I hope this was informative. If you guys have got any other ways that you trade any of the pieces of the Ichimoku or anything else, hey, feel free to leave a comment, and we'll check it out. Okay, see y'all.